The largest con in corporate history. Pretty harsh words to describe a multi-billion-dollar conglomerate whose founder and chairman was in the race to become the richest man in the world. Pretty harsh and extremely damaging. These words were part of the now famous Hindenburg report on Gautam Adani-led Adani Group of companies. The report was released on January 24th. And look at the impact of the report on the share prices of some major companies of the Adani Group. The controversy that raged after the report eroded billions of market cap. The shares tumbled down, and according to some reports, Adani Group lost roughly half of its market value. Adani Group stocks have been one of the best performers in the Indian market. In the last 1 year, just look at some of the key company shares' performances. Shares of Adani Enterprises have given about 88% returns. Just last 1 year had seen explosive growth for the share value, but the dip you see now was triggered by the Hindenburg report on 24th of January. Now look at Adani Total Gas. This share backed the coveted label of a multi-bagger stock, gaining 112%. A multi-bagger stock is an equity stock which gives a return of more than 100%. But it seems now the investor is losing faith in the stock and turning jittery. And that seems to be the story with all 7 of the listed companies of Adani Group. Hindenburg's claim of Adani Group being involved in brazen stock manipulation and accounting fraud caused the free fall of all these shares, and Adani Enterprises decided on February 1st to call off its 20,000 crore follow-on public offer, or the FPO, and return the money that it had collected from investors. An FPO is a process where a company that is already publicly listed in the stock market issues additional shares to the investors. So instead of being one of the most sought after shares, shares of Adani Group of companies started hitting the lower circuit. Cancellation of the FPO was also a huge setback. After all, the money coming in from the proceeds would have helped reduce the burden of the infamous debts of the group and helped cover some of the capital expenditure needs of some of the company's subsidiaries. Now that the FPO money stream has dried up, reports are coming in that Adani Group will reduce capital expenditure. The group released a statement worthy of being categorized as a novel with a page count of 413 pages. The Adani Group called the Hindenburg report an attack on India. It said this is not merely an unwarranted attack on any specific company, but a calculated attack on India, the independence, integrity, and quality of Indian institutions, and the growth story and ambition of India. But the damage was already done. According to report, foreign institutional investors started dumping Adani stocks. Earlier, Credit Suisse became the first investment banking company to stop accepting Adani dollar bonds, assigning a zero lending value for notes sold by Adani Ports and Special Economic Zone, the Adani Green Energy, and Adani Electricity Mumbai. Citigroup was the second one to follow suit, and now, according to an Economic Times report, some of Standard Chartered's relationship managers have informed their private wealth clients in South Asia's largest markets like Singapore that the bank would not accept these papers as collaterals for margin loans. But now the Adani Group is in rescue mode. Adani Enterprises, the flagship company of Adani Group, said on Monday that its promoters will prepay loans against pledged shares to the tune of $1,114 million in light of recent market volatility. In a statement, Adani Enterprises said, in the light of recent market volatility and in continuation of promoters' commitment to reduce overall promoter leverage backed by Adani listed company shares, promoters have posted the amounts to prepay $1,114 million ahead of its maturity of September 2024. The company further said that 168.27 million shares of Adani Ports and Special Economic Zone, 27.56 million shares of Adani Green Energy Limited and 11.77 million shares of Adani Transmission Limited will be released in due course, following the prepayments by promoters. Although a global brokerage firm, CSLA, in its report said that bank fund to the overall Adani Group debt is less than 40%. And Jeffrey said that Indian banks' exposure to the Adani Group is within manageable limits. Investors like state-owned LIC, that is amongst the largest institutional investors in Adani stocks, might be jittery. LIC owns stake in 7 Adani Group stocks, including Adani Total Gas, Adani Ports and Adani Enterprises. In the last few trading sessions, the PSU insurer has lost 38,500 crore as the value of its investments decreased to almost 43,000 crore. All this happened while, following the Hindenburg report, Norway's largest pension company KLP dumped all its shares in Adani Green Energy Limited. Although the reason that was stated was that the fund was worried that its clean investment could be siphoned off towards some other activities such as coal mining. Most of Adani's recent financing was coming from outside the country, and now with the foreign investors spooked, it's going to be a tough road ahead. Do tell us what you think about this video in the comment section, and for more news updates, subscribe to India Today.